AI might be the most important new computer technology ever. It's storming every industry and literally billions of dollars are being invested. So buckle up. The problem is that AI needs a lot of speed and processing power. So how do you compete without costs spiraling out of control? It's time to upgrade to the next generation of the cloud, Oracle Cloud Infrastructure, or OCI. OCI is a single platform for your infrastructure, database, application development, and AI needs. OCI has 4 to 8 times the bandwidth of other clouds, offers one consistent price instead of a variable regional pricing, and of course, nobody does data better than Oracle. So now you can train your AI models at twice the speed and less than half the cost of other clouds. If you want to do more and spend less like Uber, 8x8, and Databricks Mosaic, take a free test drive of OCI at oracle.com/automate. That's oracle.com/automate. oracle.com/automate.
Good afternoon. Let's do some business. We are doing it live right here, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro, the 790 KBC News Update, and just before the 790 KBC News Blitz with Randy Wang at 5. It's Mottek On Money, live on the air here, 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, all your favorite podcast platforms. Another triple-digit move for the Dow Jones Industrial Average today, and again, it is on the upside, coming off of last week's roller coaster ride. We've seen an impressive rebound this week. Stocks closing sharply higher again today, with the Dow posting its best day, well, in about a week, after strong retail sales report out today put fears of a looming recession at ease for the moment. We'll take a closer look at that retail sales report. The Dow coming in for a closing gain of 555 points, settling at 40,563. The S&P 500 moved of 88, and the Nasdaq gained 402 points, finishing at 17,594. The Nasdaq seeing its best 6 days of gain since November of 2022, and the Russell 2K Small Cap Index also regaining the spotlight. That moved up 2.5%. Looks like the Mag 7 names had a good day today. Shares of Dollar Tree surged after a strong reading on retail sales. That retailer saw about a 4.5% boost to its stock. Taking a look at sales, retail sales, the retailers last month registered their biggest increase in a year and a half, but most of the gain, by the way, was tied to a rebound in automobile sales after dealers recovered from a nationwide ban on sales due to their computer system failures. Sales surged 1% in July, according to the government report that had been forecast to rise 0.3%. A big rally in Walmart stock today after a strong earnings report came out also helped lift the retailers. Walmart shares moved up nearly 7% into record high territory. Target shares also moved up about 4%. I'll discuss the economy this afternoon with Scott Lincecum, Vice President of General Economics at the Cato Institute. Also, we're watching what's happening in the Middle East very closely. El Al Israel Airlines today said it will push ahead with a $2.5 billion deal with Boeing to buy up to 31 of Boeing's 737 MAX planes in what marks the biggest expansion of the Israeli national carrier's fleet in its 76-year history. The Israeli carrier's deal with Boeing will expand its current fleet by up to two-thirds, in line with the airline's push to keep flights running to Israel after an assortment of top airlines suspended their services following the outbreak of the war in Gaza, following the attack by Hamas on Israel back on October 7th. The Jerusalem Post reports the normally vibrant city of Tel Aviv has turned quiet as residents and business owners deal with fear and uncertainty due to the threats of an attack by Iran and its proxies in the Middle East. Meanwhile, closer to home, a Los Angeles federal judge has blasted UCLA's hands-off policy during pro-Palestinian demonstrations a few months ago, in which Jewish students were prevented from accessing their classrooms, the library, and other areas on the campus. The judge has ordered UCLA to prevent alleged anti-Semitic zones on the campus, such as the encampments that blocked Jewish students. I'll discuss the latest with Rabbi Abraham Cooper, Associate Dean and Director of Global Social Action at the Simon Wiesenthal Center in West Los Angeles. But first, on your money, the markets, the economy, and the whole works now. Joining us live, Gabriel Wisdom, co-founder and managing director at American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call this afternoon.
My pleasure, Frank. You know, last week we had a everything must go kind of sale. It was a growth scare, basically, And instead of selling everything, you should have been buying. You need to be buying when everybody's complaining and selling when they're celebrating if you're going to sell. Here's an example. Hundreds of billions of dollars actually flow into and out of some very large quant funds that buy stocks based on mathematical algorithms. So a week ago, those same funds had sold the largest dollar volume of stocks since the COVID panic 2020. And now, because the economic data is more favorable, we see tamed inflation. You mentioned the retail sales. They're not likely to see a recession. Those same quantitative funds appear to be buying stocks again now that they've gone up, according to reports from Barclays and Goldman Sachs that did the research. And then there's other very large funds, Frank, that position themselves as hedges against volatility by selling stocks they sold last week. They're buying. And finally, there's the risk parity funds that attempt to hedge risk. They're the so-called, insuring you against significant market losses kinds of investments. They certainly sold, and they're buying. So here we go. There's speculation the Fed will be able to start cutting interest rates, but I wouldn't count on much.
On the air live with Gabriel Wisdom. So for the moment, based on the readings we got on inflation and now this retail sales number, recession fears have eased a bit following that big scare last week. So what do you think the Fed's next move will be? It's widely expected they will be cutting rates soon, right? When and by how much, you think?
Well, the Fed's annual symposium is coming up next week in Jackson Hole, Wyoming. Chairman Jerome Powell is very likely going to be talking about this. Federal Reserve Bank of Atlanta President Raphael Bostic, your good friend, President Bostic said just yesterday he's looking for a little more data before supporting a reduction in interest rates. And he also said it would be really bad if they started cutting rates and then had to turn around and raise them again. But he did acknowledge that it looks like there'll be a small rate cut by the end of the year.
Very interesting. Of course, Professor Raphael Bostic was at USC before he took the job as Atlanta Fed president. We used to have him on the air all the time during the financial crisis back in those days, discussing the mortgage meltdown and so forth. And it seems the Atlanta Fed seems to always have a rosier projection compared to other regions. So at this point, Gabriel Wisdom, given what they had that washout last week, which was spurred largely by what happened in Japan that night a couple Mondays ago. Have those concerns eased now, or is that still a concern over there?
Well, I think we're getting used to them a bit. There's certainly major geopolitical concerns. We've got the Ukraine now fighting in Russia. That's unprecedented. That they would go into Russia. And we'll see what the Russian state has to say about this and what the Russia response is to the Ukraine invasion. Then in Israel, they're bracing, as you mentioned, for a missile attack from Iran. And the U.S. has sent submarines and ships to Israel in preparation for an attack. Oil prices have moved up a bit, but not much. But there's plenty to worry about right now.
Yep. So that certainly geopolitically, a wall of worry is getting pretty high. Taking a closer look at these retail sales numbers, it's been noted today that the retail sales did increase at 2.6 over the last year, but after adjusting for higher prices, they were actually down 0.4%. I think they calculate the retail sales numbers based on prices. So when gas prices go up, for example, it looks like retail sales are up, but it's largely because prices have moved up. And I understand the numbers are still well below the historical averages. What do you make of this retail sales report here and the strength of the consumer at this point?
Well, very important data, Frank, because consumers make up some 70% of the United States business, the gross domestic product, 70%. So retail sales seem to rise at the fastest pace since January of last year, just on the face of it. Clearly, U.S. consumers have some firepower left to keep spending. It's possible that the inflation has motivated consumers to buy now, especially in the auto sectors. Auto dealerships did particularly well. And you know, some of this has to do with AI and automation. Walmart, which was a standout today, the leadership at Walmart said that they're advancing their efforts in artificial intelligence and automation, and that is expected to drive additional profitability that would be beyond inflation.
On there live with money manager Gabriel Wisdom at American Money Management, the Mag 7 coming back to life. Look at NVIDIA, for example, which led the charge among the Mag 7 names, the Magnificent 7. What do you make of NVIDIA here, Gabriel Wisdom, and the rest of that group?
You know, it's interesting, Frank. There's been some insider selling at NVIDIA, and some large institutions have been lightening up because it's a stock that's up 150% year over year. They're going to publish their second quarter earnings August 28th, I believe, is the date. But it's pretty clear that their bottom line profits will rise at about 137%. That's remarkable. And that's why the stock has been doing so well. You can sell at 45, 50, 60, even 100 times earnings when your profits are growing at better than 100%. Now, the so-called hyperscalers, the major providers of all the massive data center and cloud services that we're going to need, like this is Microsoft, Alphabet, Amazon's involved, Meta is involved. They're going to be spending a lot more money over the next few years, but it appears that sales there are slowing down. So, mixed bag.
All right, and Boeing stock taking off today, up nearly $8 at 176 and change on a $2.5 billion order from El Al, the Israeli national carrier. Boeing, of course, also dealing with the astronauts being stranded there at the space station. And what about Boeing here?
You know, I like Boeing here. I think the stock has suddenly come back alive. It certainly went on sale. Now, we'll see what happens with those stranded astronauts in the Starliner capsule, the Calypso. It's been a very long time, and apparently they don't know if there's going to be more thrusters that fail without warning when the capsule eventually returns. They're talking to SpaceX, Elon Musk's operation, as a part of a rescue option, but this hasn't affected Boeing shares, but I would say it has quite a bit to do with sentiment and morale.
And it's, of course, to be noted that Boeing's also a defense contractor, and obviously with what's going on in the world, we haven't really talked much about the defense sector lately, but what about those big names?
You know, I like them here, even though they've done quite well. Boeing is included in pretty much every exchange-traded fund that has a large footprint in defense. There's the iShares U.S. Aerospace and Defense Exchange-Traded Fund, symbol ITA, that has Boeing as one of the top holdings, along with GE Aerospace and Lockheed Martin. Boeing's a major player. It'd be very, very difficult to compete with them. A huge barrier to entry. So, when you have a large moat around your company, the size of which Boeing enjoys, over the long run, that's a pretty good business.
Right. General Dynamics, another one in that group, and even the ammunition stocks, we have to keep an eye on those too, right?
That's exactly right. GD, General Dynamics, has been undervalued for some time. It's quite clear that global military spending is going to continue reaching record highs because of the deterioration in peace and security. So the military expenditures that we've been seeing over the last 9 or 10 years, I think they're just going to keep going up. That would be my bet. At least that's what the analysts are telling me.
All right. I know you're also a terrific market historian, and we've spoken over many election cycles. Here we are. It's hard to believe, mid-August now, approaching the presidential election. Certainly a lot of still uncertainty there, too. Historically, What do you make of things from a market standpoint? Looks like August has come back to life here now after that washout last week. What are your thoughts about this cycle here as it relates to the markets?
Frank, in the typical cycle, we hit our lows in August, September. Those are the most difficult months, and we've started out with a pretty difficult August. We're in an election year, the fourth year. Those are historically very, very strong years because the incumbent party and everyone that would like to keep their jobs in the government root for softer money, cheaper money. That's what puts the Federal Reserve right in the middle of this whole thing. Now, as Rick Newman from Yahoo Finance pointed out last week, none of the candidates, and certainly neither of the presidential candidates, are talking about the deficit or the or the high interest payments that we're making. The Congressional Budget Office sees the federal debt rising well above 100% of gross domestic product over the next few years. It's not a big problem, but it needs to be addressed. So if I was going to be worried at all, I'd be worried after November. That's when this dialogue, this type of conversation will become front and center.
Absolutely. Well, we try to stay ahead of the curve here. As we say, see it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KBC, along with Gabriel Wisdom on the air live with us here right now. At this point, Gabriel Wisdom, where are you putting money now and or taking it off the table?
Frank, the recession fears are real. They are, and it seems like a good time to hunker down a bit. I am looking at the iShares USA Quality Factor Exchange Traded Fund. Quality stocks are the kinds that are have deep value characteristics and healthy balance sheets and very high returns on capital. They're not very volatile. They have elevated profit margins, and they're experiencing rising consistent sales year in, year out. So I like that Quality Factor Exchange Traded Fund. The symbol is QUAL. Looking at that, and finally, I'm interested in the drugs again. They've softened a bit on concerns of the Medicare caps. Moderna symbol mRNA is getting interesting. They've got a treatment for skin cancer that I think has some hope.
Terrific. Gabriel Wisdom, co-founder and managing director at American Money Management, based right here in Southern California, author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for joining us live here this afternoon.
Thank you, Frank.
Out to the freeways now on 790 KBC. 790 KBC welcomes David Gilmour to the Intuit Dome coming up on October 25th. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Call now, 1-888-795-2222. The tickets are furnished by Live Nation. Mottek On Money continues here in 790 KBC. We have a winner once again on Wall Street with the Dow popping more than 500 points at the close, 555 points. To be precise, at 40,563. The S&P 500 moved up 88 at 5,543. And the NASDAQ jumped 402 points, 17,594. As this week's winning streak continues, the yield in the 10-year note still below 4%, now at 3.91%. NVIDIA participating in today's rally up nearly $5 at $122.86. Taking a look at the price of oil, slipping a bit here after hours, down to 23 cents at $77.93 a barrel. As we keep an eye on what's happening in the Middle East, the price of gold near its record high of $1.30 now at $2,493.70 an ounce, coming off the record high we saw recently above 2,500. The volatility index, the VIX index, continues to ease, down about 6% today. Taking a look at the cryptos now, we see a Bitcoin up about 600 at 57,650. Ethereum up nearly 50 at 2,578, and Doge at the moment at 10 cents. Shares of Boeing moving up nearly $8 today at 176 and change after getting a $2.5 billion order from the Israeli carrier El Al for 737 MAX jetliners. We see General Dynamics shares up more than $2 today at 295 and change, and the defense sector Retailers also in focus. Walmart hitting record highs today. Sales at U.S. retailers last month registering their biggest increase in a year and a half, but most of the gain was tied to a rebound in automobile sales. Walmart out with its earnings, exceeding analysts' expectations and hitting a record high. Walmart, of course, the largest retailer in the world. Now the latest news for you here on 790 KABC. KABC recession concerns rattled the markets last week. This week, the latest readings on inflation and retail sales have eased some of those economic worries, and the market has climbed that proverbial wall of worry. Many wild cards still on the table, as we just heard from our previous guest. Good reason for concern given the adjustments recently, by the way, in the monthly job numbers we've been getting. Also, of course, geopolitical uncertainty and political uncertainty on this side of the pond. Let's talk about it now with Scott Lincicome, Vice President of General Economics at the Cato Institute. Scott Lincicome, thank you very much for taking the call here this afternoon.
My pleasure. Thanks for having me.
All right, give us your general impressions of things. Are we heading toward a recession here?
I don't really think it looks like it, quite frankly. At this point, if you look at the various indicators that the Federal Reserve uses or others or the NBER to look at recession indicators, it really doesn't look like we're seeing the slowdown you'd need to tip into a recession. But that said, it's undeniably clear that we are seeing a slowdown in aggregate economic activity, whether that's jobs or output or other measures. And so the big question mark becomes whether there is some sort of shock, external, so meaning something abroad or something at home, that tips us over into a recession. Because it's clear that the United States economy is weaker than it was, say, a year or 2 years ago.
All right, certainly the job picture has been painted as being exceptionally rosy, but we see these adjustments now every month. Turns out it's not that rosy, right? Tell us more about that.
Well, it's still not terrible, though. I mean, you're still looking at aggregate gains of 100, 200,000 jobs per month. And that's not bad. I mean, given where we are in the business cycle, given where we are after months and months of recovery from the pandemic, it's not a point at which I would say, we need to really worry. Now, again, predictions are worth the paper they're written on, right? But at this point, I think it's still looking pretty decent that we could have that much vaunted soft landing.
All right. Well, certainly your view is taken very seriously. So I know you testified earlier this year. I think we may have had a chance to speak with you then when you testified before the Joint Economic Committee regarding the so-called Inflation Reduction Act. Yeah. Tell us how the impact of that's been playing out.
Yeah, well, sure. I mean, and here's where things aren't so great. And one of the things about the U.S. economy you always need to remember is that the U.S. economy is massive, and that you can have good news and bad news throughout. And it's really, we have to always think about it in the aggregate. But on the areas we should be worried, I think there are a lot of reasons to be concerned that the Inflation Reduction Act, the CHIPS Act, really aren't producing what we want them to produce. Because undeniably, if you look at the data, you see an increase in manufacturing construction spending. So this is companies building manufacturing facilities. The problem is that there's not a lot of evidence yet, at least, that we're getting a lot of bang for our buck. That, when the government spends trillions of dollars in subsidies, you're going to get something, right? The question is what we're really getting. And if you look at whether it's electric vehicles or solar panels or semiconductors, so far we're not getting the cutting-edge, innovative technologies that we want. We're not getting thriving, lean and mean, globally competitive facilities that don't need government support down the road or government protection with tariffs and other things. And so there are reasons to worry. That at the end of the day, we're going to have a bunch of high-priced, high-cost production or a bunch of canceled projects and nothing at all. Now, I should note, there's still a lot of clock left in this game. But right now, there certainly are reasons to be worried.
On the air live with Scott Lincicome, Vice President of General Economics at the Cato Institute. It should be noted, prices up, about 20% since President Biden took office, and according to economist Arthur Laffer, who's also a guest on the show from time to time. He describes that as a hard pill to swallow when he was on Fox Business just today. So what about the rate of inflation and what the kind of pain consumers are feeling?
Yeah, so here there's good news and bad news. The good news is that the price increases have slowed dramatically, whether it's food prices or inflation overall, even housing prices have moderated from what we were seeing a couple of years ago, where, it was 10% year-on-year gains. So that's good news. And we hope that wages will slowly catch up to the price gains that we already saw back a couple of years ago. The bad news, though, is that it's very unlikely that prices are actually going to go down, that we're going to see a return to price levels we saw before the pandemic. And for normal folks, heck, for you and me too, it is not a lot of comfort that the rate of increase has flattened out when we're still paying 20% more at the grocery store, or still dealing with rents that are a lot higher. So, the levels are higher, and that's going to be an issue. So, economists can talk all they want about, well, inflation has slowed. But the fact is, because those price levels up, it's gonna remain painful until our wages catch up. But for a lot of folks, that could be years down the road. And so it's no wonder that inflation's a huge issue in the election. It's no wonder that both candidates are, at least so they say, laser focused on prices right now. But like I said, that's cold comfort for the folks that have to go out and buy groceries.
All right, and trade policy is something we're hearing more about once again in this presidential cycle. You're an expert on that, so let's talk about that for a moment, and maybe you can give us some comparison here.
You're right. So, it's bad and worse when it comes to trade policy for these two candidates. President Biden and Vice President Harris have not really done much to eliminate tariffs that were put in place during the Trump administration, whether that's on steel and aluminum or washing machines or solar panels or products from China. And that's going to add a bit to our prices that we pay domestically, because one of the dirty little secrets of tariffs is they not only raise import prices, but they raise domestic prices too. So we're all paying a little more for that. And like I said, the Harris and Biden administrations haven't done anything to fix that. But the worst side of it is that President Trump is proposing even more tariffs in the future. 10% global tariffs just yesterday in North Carolina. He even suggested 20% tariffs on everything we buy from abroad, not just stuff from Canada, not just a few products here and there, but everything, which means, food and clothing and the rest even from places like Canada or Mexico or Japan and the rest. And that would mean a significant increase in prices, particularly for these basic necessities that, you can't just go without. And that is going to be tough for Americans that are dealing with inflation and that have already gone through, like I said, that big increase over the last 4 or 5 years. So, unfortunately, you don't hear Kamala Harris saying she's going to repeal these tariffs. And because they've maintained most of the Trump tariffs, it's kind of a moot point politically. But in terms of policy, there's no doubt about it that a 10 to 20% across-the-board tariff would be pretty darn painful for American families.
Scott, thank you very much for taking the call here. That's Scott Lincicome, Vice President of General Economics at the Cato Institute, live with us here on Mottek On Money on 790 KBC. Mottek On Money continues here on 790 KBC following the latest headlines in the Middle East. Qatar reportedly urging Iran to carefully weigh an attack on Israel, citing progress in peace talks, according to the Qatari Prime Minister, speaking with the Iranian leaders after today's hostage ceasefire negotiations in Qatar to update them about progress in the talks. According to the Times of Israel, the report says the phone call appeared to have had an impact, asserting that officials from one of the mediating nations learned that Hezbollah has for now pushed off on acting on a previous decision to attack Israel. Meanwhile, the normally vibrant city of Tel Aviv, according to the Jerusalem Post, has turned eerily quiet as residents and business owners deal with the fear and uncertainty due to the threats of an attack by Iran and its proxies in the Middle East. Meanwhile, closer to home, A Los Angeles federal judge blasting UCLA's hands-off policy during pro-Palestinian demonstrations a few months ago, in which Jewish students were prevented from accessing their classrooms, the library, and other areas on the campus. The judge has ordered UCLA to prevent alleged anti-Semitic zones on the campus, such as the encampments that block Jewish students. Joining us live now, Rabbi Abraham Cooper, Associate Dean and Director of Global Social Action at the Simon Wiesenthal Center in West Los Angeles. Rabbi, thank you very much for joining us. First of all, your reaction to that dramatic announcement and ruling by the federal judge here in Los Angeles.
Well, it was most welcomed by the Jewish community, not only in Los Angeles, but across the country. This has been a plague at the elite universities from coast to coast. What is completely shocking, and I don't think whoever made the decision at UCLA to actually unleash their lawyers to try to overturn what the judge said. I think, frankly, the judge was giving a lifeline to UCLA in anticipation of classes resuming soon. And the fact that UCLA has now sent lawyers to try to get it overturned is done no favor to Dr. Frank, who's the incoming president coming up in January, and calls into question in terms of the people who are running UCLA. I imagine many of the faculty who maybe are not at all upset about what happened, who may be pro-Hamas, and there, you might say, could be a lobby within the university hierarchy that doesn't want to in any way, shape, or form show any respect insofar as the Jews and others who are avowed Zionists and supporters of Israel. It really is deeply disappointing that UCLA's leadership just didn't grab the lifeline and set in place the necessary defense mechanisms so we don't go through more of the same in the coming weeks and months. And I'm sure you saw what happened last night in New York with Vice President Harris's event almost being overrun. Everything that we're hearing, that we're seeing is unless the universities are ready to take firm action, we can see a repeat, not only in front of the Democratic National Convention, but again at the schools. And sort of just to put it straight is if you pay tuition, if you're a parent out there and pay tuition for your kid to go to university, they should be able to go to class, go to the library, not be harassed because of what their views or their religious identity might be. It's sort of like, I would say Americana 101. And yet UCLA seems to find a way to signal our community that we're not being treated as equals and signal some of the bad actors that they might get away with the kind of behavior in the coming semester. It's deeply troubling.
On the air live with Rabbi Abraham Cooper at the Simon Wiesenthal Center in West Los Angeles, and reading the judge's statement here. In the year 2024 in the United States of America, in the state of California, and the city of Los Angeles, Jewish students were excluded from portions of the UCLA campus because they refused to denounce their faith. Quoting the judge's order, that's the order from federal judge Mark Scarsi here in Southern California. And he goes on to say this fact is so unimaginable and so abhorrent to our constitutional guarantee of religious freedom that it bears repeating. Jewish students were excluded from portions of the UCLA campus because they refused to denounce their faith. He goes on to say UCLA does not dispute this. Instead, UCLA claims it has no responsibility to protect the religious freedom of its Jewish students because the exclusion was engineered by third-party protesters. What's your reaction to the judge's order on this?
I agree with every single word with the judge. Obviously, you can feel the anger and disappointment in having to write such a thing to adults who are in charge of one of the most important universities in our nation. The fact that UCLA wants to, you might say, weasel its way out of its fundamental responsibilities to all of its students is absolutely shocking. And I hope and pray that things will be quiet on the campus, but since they don't seem to be concerned about equal protection in terms of religious freedom, I guess they're not really going to be praying very much themselves. But as students and parents in the community get ready for the next semester in the shadow of the presidential elections, it's beyond belief that UCLA, instead of embracing a pretty straightforward decision by a federal judge, now releases its lawyers to try to get out of their responsibility. What we need from UCLA and the other elite campuses are less lawyers and more leadership.
On the air live with Rabbi Abraham Cooper, and the judge's order, the preliminary injunction requires UCLA to stop providing ordinarily available programs, activities, and campus areas to the entire student body if they become unavailable to certain Jewish students. What other actions, Rabbi, would you like to see at this point?
Well, I think also at this point, it's clear that these issues and the actors who are threatening the Democratic National Convention, it's way beyond the Israel-Palestine conflict. This is much more fundamental. You have groups like Code Pink and others who are professional anarchists who see an opportunity to really destabilize education, destabilize our city, as they succeeded just a few months ago, and we're this close to actually overtaking one of our local synagogues. And this is a very serious matter, and for UCLA's administration not to finally come to grips with it and thank the federal judge for sort of just saying what is obvious to everyone else here is very disturbing. We'd like to hear from our elected officials, our governor, and the regents. And this is a systemic problem now across the state in terms of the UC system and some of the other universities. And we're just talking about what has always been a fundamental of American society, American life. Yes, freedom of expression for everyone, including things we don't like to hear, but also freedom of religion. And when you pay a tuition to a university, that's a contract. You have to come through and make sure that a student can get to the library to study, can get to a class.
Right. Rabbi, I wish we had more time. We'll have to stop there. We'll keep an open line to you and follow all this very closely with you. Rabbi Abraham Cooper, Associate Dean and Director of Global Social Action at the Simon Wiesenthal Center in West Los Angeles, live with us here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back tomorrow with more at 4 here on Mottek On Money on 790 KBC.
We're all juggling life, a career, and trying to build a little bit of wealth. The Brown Ambition podcast with host Mandy and Tiffany the Budgetnista can help.
Let's talk about the financials behind locks. It can be quite pricey, but as your hair locks, it needs way less product. When I had my fro, it was way more costly as it relates to products because my fro was thirsty.
It's very expensive. Yeah.
Yes, I need the whole bottle. So
what, a dime-sized portion of what?
Girl, the laughter.
Brown Ambition.
Wherever you listen.